Well, what's going on, guys? Jeff here with Let It Grow Investing, and I wanted to tell you guys a little bit about First Form. First Form is a supplement company that I've been using for a long time, and they'll definitely help you get on your path to your fitness freedom and your the goals that you have for building a better you. So that whether that's building muscle, cutting weight, whether it's hair, skin, nails, anything else that you're trying to really improve on yourself, get yourself in shape. For longevity, for peace of mind, for cognitive support. They've got a product for pretty much all of it. And it's some of the best products that I've used. I've tried everything over the years, and I keep coming back to First Form because it works. So if you want to help me out, help support the podcast, you can go over to firstform.com. That's 1stphorm.com/let it grow and check out some product and see what can help get you on your way to those fitness goals that you've got set for yourself as well. So again, be sure to use my link, Let It Grow, at firstform.com. What's up, guys? I just did this. I'm going to re-record and see if this doesn't work any better. I got 42 minutes into it and realized that it was recording the first 8 minutes and then stopped for some reason, even though it said I was still sharing my screen. Tough. It's a tough position here. So rough weekend here for me. Tough soccer weekend. And, we won 2 games. We lost one. We tied one. So 2-0-1. We had every tiebreaker met for our final game with the other team that was in our bracket. And we had to go head-to-head with PKs just against that team, not even in a game, to see who went on to the final, and unfortunately we lost. So I was hoping to do this one later tonight, kind of, pull an all-nighter and get this thing recorded. But right now it is, around 3:15, and I am now at home. But I digress. So we've got that going on for week 42, and my voice is kind of shot too after 4 soccer games this weekend that I was either coaching or involved in. And we're going to try to get through this one quickly. So week 42, we were looking at 5 different stocks. We were looking at Amazon, Mercado Libre, Etsy, Merck, and Devon Energy. Surprisingly enough, we are adding Devon Energy. We do have around $2,500 worth of Amazon in our portfolio. It is up around 55% for us. Broadcom, I was looking at that one also. We are up 222% on Broadcom. That is a stellar purchase. Thank you guys for voting for that one. I'll give myself a pat on the back for having the recommendation when we did. The S&P is up around 40% from this time last year, up around 25% for this year by itself. So a lot of stocks are getting into that overvalued territory. It's been very hard to know which ones to add at any given point in time. So Tesla has been on a little bit of a sideways. They were trending sideways. We weren't competing with the S&P 500. Over the past 2 months, Tesla has taken back off. I had a covered call written on this thing at 250. I think I wrote it when Tesla was at like 205, 208. And I didn't think for the life of me that I would have to be worried about selling my shares. But Tesla took off. Then the robotaxi event happened. A lot of people saying that the robotaxi event was a huge flop. I had it pulled up earlier. There are all kinds of articles saying that this thing was just a dud. I'm going to pull it up real quick just so you can see what I am seeing. We were looking at this Uber Technologies being, a 10% up. Forget where it was here, recently viewed. It should have been there. But if you look at every article on Uber, you're going to see Tesla leaves Uber plenty of road. Waymo and Uber and Lyft are the biggest winners. A lot of different, the fact that it's a toothless robotaxi reveal sends Uber and Lyft stock soaring. A lot of different things here that are basically saying Tesla left the door open for Uber and Lyft. I can see that. I also believe that this is a very big sell the news type event from Tesla. So Tesla had a lot of people hyped up about the robotaxi, about the Model 2, the sub $30,000 vehicle, a lot of things robotics, and a lot of those things are still there. We didn't really present how we're going to get to those things. We didn't really show what the path is going to be in order to get from where we're at to where we're going. You know, we've had this happen before with the Tesla, the Roadster. And, you know, if you've been waiting for that one, you're still waiting for that one. If you put in a Cybertruck reservation 5 years ago, you might still be waiting on that as well, depending on what model you ordered. So a lot of different things. Oh, yeah, look at me ordering soccer jerseys and everything from soccer.com. You know, it just listens to me. We've got, Tesla trending down around 8.78%. On the day on Friday. So I was lucky enough to hold on to my shares, and I'm contemplating, do I buy more at these levels? For a couple different reasons, I'm going to show you real quick. I'm thinking that it could be a good ad. I was talking PayPal a bit earlier, but that's not what I'm looking at now. So let's take a look at Tesla. I want to do a quick look here at what's going on with Tesla stock. Let's take a quick peek. And here we go. We got crashing up on this 13-day simple moving average is your green line. So across the 50-day, across, it didn't touch this 200-day. So it did not break that. So this would be sometimes a false positive on a 13 versus a 50-day. So the green line versus the yellow line. And then we cross back above it. But I have a strong feeling that this 13 is going to come crashing back down through this 50 again. But we have found support at this 200-day line, which is going to be your orange. And it does look like we are finding support around that level. Yes, we did break it here, but we kind of bounce off of it here when we've had higher lows, and then we broke after this event. So I don't know that this is going to be a long-term downward trend. I think that we could find a lot of support here around 200. We could certainly go back down and get into some of those other lows back in the 150 range. It could certainly happen. I was looking at this analyst research and just kind of laughing to myself that someone thinks it's going to 2486. I don't see that. Short of the company deciding that they're not making cars anymore, which I don't see that happening either. So I don't think that it's going to happen. I do think that we could have downside, but I think long-term, we're going to have a solid path forward. Similar with Palantir. That was my kind of correlation earlier. Palantir overvalued right now. But I do believe that in the long term, the amount of contracts that Palantir has been closing is going to be huge for the company. So Palantir, a good bit overvalued at the moment, but not at a long-term clip. I think by 2030, we're going to be happy if we bought Palantir at 43.51 or if we bought Palantir at 37 or 30, right? And if we went back into August, we could have been buying it in the 20s. So I think right now it is pricey. I do have a covered call written on this thing at 40 in December. I might lose those shares. I have more shares of it, and I will try to buy more on dips. So if I can add under 40, I probably will. And I'll try to, build up my position in Palantir because I believe for me, it is a long-term hold. And that's what I'm looking to be as a long-term investor in finding those stocks early and going ahead and investing in those. So we've got that there. I was looking at the PPI. Those prices kind of came in kind of sideways. Goods are a little bit elevated, 0.2% up. The services was, no, goods, sorry, wrong way. Goods were running at 2%. Core services are running at 4%. So yes, core services is higher than the inflation in core goods, and we can see that in a lot of things with the labor market as that minimum wage is often pushed up to like $15 an hour now, and I think a lot of those costs are going to kind of translate into a lot of those services type industries, whether it be cleaning or landscape or whatever those services might be. with those lower end or lower paying jobs, we're going to see those prices for those services remain higher as we have to pay more to have those people be employed. So if they were $10 an hour positions and now they're getting paid 18, well, someone's got to cover that. So the goods might be cheaper. I did make the connection that grass seed from last year to this year, 50 pounds was costing me like $95 last year, and now it's costing me $83. A little bit of a difference there with the seed crop and everything else that is correlated to the industry. But there is probably a little bit less demand on who is, buying grass seed this year versus last, and the amount of supply that they have out there. So some of these costs are coming down on the goods, but the services remain expensive as we still have to pay higher labor this year versus what we had to pay last year or 4 years ago, right? So those prices are still sticky. We are seeing that, and it is showing in a lot of these reports. So that is that. We've got. I had it all organized the first time I recorded this thing, and now I'm out of whack because I already changed off all these things. But yeah, so we covered the fact that we're buying Devon Energy. I still think that the oil and gas segment is a strong way to be playing this market. Let's take a look quick here. I'm going to try to pull up DVN. We're buying DVN. We were talking about NVIDIA. We were looking at Blackwell. I'm just trying to recap in my mind what we were talking about. NVIDIA. Trying to think. Devon. Yeah, with Devon Energy, let's stick with what we got, and I'll try to circle back to that in a second. Devon Energy, around 21% of upside, 52%, $52 price target. Sorry, guys, that's a stressful day for me. Snapshot, what do we got? The dividend yield around 4.6%. So we've got that also. Low PE, good entry point. Oh, that was what I was talking about. I had NVIDIA and then Bank of America. Let's just go with that. NVIDIA, we have the event this week in DC. They are, rolling out the next steps are going to take in AI. The Blackwell GPUs, they are going to be operating 4 times faster, and they are going to require a quarter of the power consumption that the old GPUs had. So a lot of people saying that the spend on AI is overdone with companies like Amazon and Google, and other people saying, no, it's just the beginning where they're going to continue to spend. And then I'll get back to Amazon. So I still believe that NVIDIA is a great company. We could have bought this sub 100 back in August. And I think, I was kind of pounding the table to myself. I can't tell you what to do or that you should be buying it, but I'm telling you that I'm doing it. So that's the only recommendation that I can make is this is what I'm doing for myself. You guys do your own due diligence for you. I did go ahead and purchase more there. I thought that was a no-brainer, a layup of a play, and it's proved to be right as it's up, 30% since then. So NVIDIA, I still believe, has a great road going forward. Now the analyst research looks like we've only got around, 12% of upside from where we're at 13, whatever, close enough. NVIDIA, still a very strong case for a company that is going to be very strong going forward. They do own a lot of that market segment for AI and those GPUs. I think that is going to continue. Those big companies are still going to be buying these new, AI devices from them. Bank of America, Warren Buffett is sold about $10 billion worth of BAC. It is one of his largest holdings, was one of his largest holdings, and they continue to sell and trim the position in BAC. A lot of people are saying that we should be buying bank stocks as rates come back down and lending is going to be spurred and everything else that's out there. So it leaves the question, why is Warren selling out of Bank of America when everyone else is running to it? And I think that is going to be a valuation play. I think it's going to be a macroeconomics play as to why he's getting out. And I think he's concerned about the fact that the S&P has rose about, like I said, 25% this year, 40% from this time last year. So major gains. This thing has run up. I don't know that I got oh yeah, here we go. The October 23, we were probably around $25 and we're up near $41. That's pretty substantial gains for him. And I don't know that he thinks that this is going to continue. Something's got to give, something's got to break, or this is simply just overvalued. So he's cashing out of this position. Amazon. Kathy Wood is buying more AMZN for ARK Invest. I think she bought about $15 million of Amazon. Still slated to have around 19% of upside here. Price target 188. And anything with multiple revenue streams that are all in the right area at the right time, between AI, between cloud, between subscriptions, retail, everything that they do seems to be in the right spot at the right time. So I still believe that Amazon has a lot of upside left to them. I think it is a great company to buy and hold for the long term. And I can't disagree with her play there. ARK Invest has been tough. The fact that they are in a lot of those smaller companies and the ones that have really been getting beat down since all the rate hikes were going up should start to benefit from rates going back down. We are looking at like 87% of economists saying that we're going to get a 25 basis point cut at the meeting in November. And we'll see what happens from there with the information that comes on the CPI, PPI, inflation reports, PCE reports into the Fed going forward. And we'll see what Powell does with that information. So I still think that Amazon is a great long-term hold. I'd much rather buy Amazon right now than Bank of America. I was looking at several different bank stocks for today. Ultimately, I didn't pick one of them. Amazon, like I said, we didn't buy it this week, but for the investing challenge, but I did add some for myself. So I still think long-term Amazon is a solid play. And I kind of think that I would like to add to some more of it as well. I was going to say some stuff that sounded like a recommendation, and I shouldn't have said that. So I'm going to buy some more for me. How about that? Week 43. I'm just kind of going to roll through this one, guys. I am tanked at this point. I am just exhausted. Week 43, the poll. We're looking at 5 different names for this week. We are looking at AMD. AMD, we purchased this time last year. We up 45% on this purchase. And I do believe that it's still got some more left to go. We are currently sitting at a price point of 167. We've got an average price of about 189, 12.5% of upside. And I do believe that AMD and their processors have a great product. And I do think that they are going to try to, muscle their way into the AI race as best they can. It looks like NVIDIA might have a little bit more upside, but I wanted to throw in AMD in there for the fact that we had it and we already voted for it last year. So AMD gets the nod over NVIDIA this week. If NVIDIA was a little bit cheaper, say the 1-teens, I would probably have opted for NVIDIA, but I think NVIDIA might have ran up a little bit too much too fast. So I'm looking at AMD. Number 2, we're looking at Adobe. Adobe had this massive run from the low 5s to about 580, 590 and cooled back down to 495. I trimmed it in that 570, 580 range myself. I got completely out of it. And now it's back at 495. 25% of upside. They're leaning into AI. They're leaning into the subscription model. They have more and more content creators that have to have these products in order to make their content. More and more illustrators and editors and things like that. The fact that AI is going to be right on those tools and they're going to sell those subscriptions to what they already are doing, I think is going to be great for content creators, as AI is going to make it faster and more seamless, and you can automatically, artificially do what is going to need to be done in their tools right on the program. So I think that could be huge for Adobe going forward. And the fact that I think we are in that range of getting to be oversold, right? If I look at this here, we look at this overbought, oversold on the RSI. We are creeping down into oversold territory. Yes, we bump back up a little bit, but I still think we have a good amount of room to run higher here. So number 2 is Adobe. Number 3, Pfizer, PFE. I'm looking at this one as we get, a beat up stock coming out of COVID. A lot of people were looking at vaccines. Well, Pfizer has been on a buying spree. They are looking to buy their way into oncology drugs. They are looking to have 8 blockbuster oncology drugs in the next couple years, and they're trying to build out that pipeline. They had another drug that was just approved by the FDA. I'm going to mess up the name. HASI. I forget the name. I don't even know how to say it. Half these drugs that they come up with, I don't even know where they come up with the names. What was the name? Let me get to the news. That way you guys can see it and you can try to say it. Where are we? What is this? Shareholders. Why does it have all these other tickers except for the ones that I want? I just want news for Pfizer. How about that? Not market news. I think it was HAYMAVZI. I might be wrong. Here we go. Pfizer wins FDA approval for hemophilia B drug that will be first once weekly treatment. Oh, Himpavzi, hemophilia article. Right there we go. Probably saying it wrong. That is what it is. They did have a downgrade from 31 to 30. There's not a ton of upside, but I feel like we are getting into the point where their revenues are going to start increasing pretty dramatically off of these oncology drugs that they are building. And the quarterly dividend at 5.73% looks pretty enticing to me here. So I believe we have more upside as they build out, as they spend to purchase other companies to really build out their oncology development. And I'm comfortable with that 5.73% dividend yield to buy this one and hold on and wait for those gains. Number 4, Verizon, VZ. Again, we're looking at this dividend. Their CapEx has slowed after they have built out the 5G development. We've got about a 6.3% dividend yield. We're looking at a company that is, almost like a utility, right? A lot of people have this, got to have a phone, and people really lean into Verizon for, some of the best service that's out there. I definitely am happy with my service with Verizon. I like the dividend. The PEs might be a little rich at 16 times. It's probably a better entry in the lower teens. 13, 14 is probably a bit better for Verizon. But a lot of people are leaning into this one for people that are getting out of money markets, right? If you're getting out of a money market and you want a stable dividend, Verizon is covering this dividend. Yes, the dividend payout ratio is high, but I still do believe that 6.3% dividend is safe. So a lot of people looking into VZ for that. If you're getting out of bonds or money markets, you could roll that money over into Verizon, which would also drive that share price up a bit. So a lot of different reasons here why I'm buying Verizon. I do believe it's safe. I like the dividend. And the CapEx has slowed after they built out 5G. So not as much coming up on the expenditures, which means we're going to have more free cash flow, which means we can pay some higher dividends and some rising dividends and pay down different things that they have out as well. So that's number 4. That's Verizon. Number 5, I forget if it was on this episode or the one that I just recorded that didn't get recorded, I was looking at bank stocks. I then did a little bit more digging on Bank of America. I found that news. JP Morgan, I think they're a little bit capped out. I was looking at US Bank Corp, USB. That didn't look like it had too much upside. And, this one that I'm going to give the nod doesn't have that much upside either, but I think they are good entry long term. And that name is TSLA. Tesla, with that robotaxi news getting traded down, I think it could be a good time to enter this one. I think this average is getting pulled down by these analysts that say that Tesla is going to $24, and I simply do not see that. So that is going to pull down these averages to lower. I believe that the fair market valuation is higher. I probably think in the next 12 months we could be at 260, 270 with a couple different things going on. We've got the Model 3 tariffs. Those were issued on those with some of the parts coming from abroad. We have the Model Y revamp. That's going to be huge. That is also rivaling the sales of the F-150, the Ford truck, for number 1 vehicle sold in the U.S., which is absolutely massive. The F-150 has been there for 50 years, or the F-Series pickups have been there for 50 plus years. Model Y could take that title. We've also got autonomous. We've got robotics. Yes, a lot of that stuff is still being developed, but I believe in 5-10 years, we're going to be happy that we bought Tesla. I still believe that they have a lot of that future going forward. And I think that it could be a decent entry point as we're looking at this sell-off from this past Friday, down 8.78%. I was able to snag a couple shares on Friday, 16. I think I got almost at the bottom. I might have gone down lower briefly in the morning and I missed it. No, I think I got it right around somewhere right around the start of the day. I can't even get to where I'm trying to find. Yeah, I think I got it at 216.50. But anyhow, so yeah, that is what's going on there. I've got those 5: AMD, Adobe, Pfizer, which is PFE, Verizon, VZ, Tesla, TSLA. AMD is obviously AMD, and Adobe is ADBE if you're following along. So please get over there to Facebook, Let It Grow Investing, the podcast page, or you can vote on YouTube or simply vote on Spotify if you're listening on there as well. So thank you guys very much for following along. Thank you for voting. I definitely appreciate the subscribes, the shares, and all the love that we got out there for the podcast. And hopefully I can help you guys, at least get on the path to financial freedom. So that is what I got for you guys this weekend. Thank you very much for listening. And I definitely appreciate all the support. So thank you guys, and I'll talk to you next time.